So, yeah, but before we get into any of the kind of charts, specific coins or whatnot, maybe do a high level overview of Bitcoin and Ethereum, or maybe your thought process on general kind of macro sentiment, because there's clearly been some sort of a shift, right, since we started this year, even though you can argue that, things are still bad, but I think the whole concept of like how to trade this market is like, is it really that bad, right? And what are the masses, or what does the sentiment think about that? And are we getting to a point where rubber's going to hit the road in some instances? I mean, I personally think like February is chop month. It could extend to May, but we just had a very big move, and whether it's distribution or just reaccumulation and consolidation, I mean, this is where the range is set up, right? And that's kind of what we just talked about. So curious under your thoughts on that, and maybe even a little color on CPI. I mean, I thought it was kind of like, it was like a mixed number. I feel like a lot of these numbers that are coming out relative to what happened last year is like, you won't have such a big delta in consensus versus estimates because there's a bit more clarity in how the data is flowed through, and maybe there's not so much discrepancy in things. And so, yeah, maybe just quick overview on some of that as well.
Yeah, absolutely. I think in all honesty, too many of us, or too many individuals, discern themselves with macro, and then they get swayed by their macro bias from a trading perspective, and it can impact their trading in perhaps not such a desirable way. And I think one of the lessons that I've learned is that the macro trade can take an absolute time to play out. It could take weeks, it could take months, it could even take 2 years. So you really have to segregate or separate the concerns with thinking in macro as an investor, but then separating your views as a day trader or a swing trader, because nothing much has really changed. And when we look at the charts here on Bitcoin, we've all talked about the doom and gloom and the optimism with equities could go to new all-time highs, and you got the other side of the party which is telling you equities could break down into 3,000 level. But really, when you look at the charts from across the board, it's just all one big trade. It's fascinating to me that here's a chart on Bitcoin. This is a June candle. We've spent 9 months within this range, and that is a considerable amount of time for Bitcoin to range in this environment. Meanwhile, there's a lot of macro heads that are still debating and discussing. We've seen the audience of the crowd go from Fed pivot to Fed pause to now the fact that 25 basis point rate hike is bullish, or because inflation is coming down, that's a reason to be bullish. So the narrative keeps changing out there. At the start of the year, we were talking about recession being priced into the market, and then we're going to head into recession in Q2 or Q3. That now seems to be pushed out onto the curve in terms of where we now see three theses or three sides: the soft landing, which I think is very unlikely; the hard landing, which is the recessionary environment, and then there's the inflation remains sticky, which I think is a favorable outcome, which could mean that rates remain higher for longer. And such that we could see recession much later down the line, possibly towards the end of 2023, early 2024, unless something drastically happens. But what does that mean? I think that essentially you can infer the fact that, well, if that's the case, then as an investor, do you really want to be buying into stocks and Bitcoin or altcoins, knowing that there's a probabilistic outcome that we could see further pains down the line? We could see lower prices, from where prices currently are. But then as a trader, this is what you live for, right? Because I think anybody who's running macro portfolios or trying to build a portfolio, they're going to get destroyed. It's not going to be the same environment that they've been conditioned to as of the last 10 years or the last decade. Low rates, forever QE. It's just been a one-way ticket in terms of investing in the stock market. But I think now for the next 2-3 years in particular, we are going to see an ebb and flow of liquidity coming into the market, coming out of the market, whether that's via the reverse repo facility, whether that's China reopening. And again, just across the board, I think the conditions are prime for anybody who's a highly skilled technical trader. This is a very, very technical market right now. And I think that's going to be the case for the next 2, 3, 4 months at the very least. Meanwhile, everybody on Twitter, especially crypto Twitter, is debating whether this is a bull market, a bear market, an echo bubble. At the end of the day, when we look at it zooming out, we've just been contained within this range. That's all there is to it. It's as simple as that. You look for selling opportunities at the range high, you look for buying opportunities at the range or from a high time frame. So in perspective, and that's all I've done really, is keep it very, very simple.